So which of the following are true about payment banks? Okay, so here it allows current account and savings account. It allows net banking. It allows fixed deposit. It can give only 10% of its deposits as loans. So if you see, answer is 1, 2, because term deposit is not allowed. Term deposit means something you are, for a particular term, you are giving money in the bank, like you put a fixed deposit of 10 lakh rupees and then we'll take back after 5 years, or you will put recurring deposit. Recurring means like little bit is being deposited. So that kind of thing is not allowed. But there is something called the other one, that is current and savings account. Okay, the term deposit is not allowed, but the normal deposit which you do, the savings account where you keep putting money and keep withdrawing in your ATM and all, that is allowed. Okay, and net banking, online banking, everything is allowed. And then loans are not allowed, meaning payment banks don't give out the loan. Usually an ideal bank, you write, an ideal bank, what they'll do, they'll take your money, okay, and then give you some 5% interest, and that money they'll give out as loan also, and ask some 7% interest from the customer. So that middle, whatever profit they earn, that is how the bank runs. But payment banks is a different concept. Okay, like we have Airtel Payment Bank, or maybe the Postal Payment Bank is there. There are many banks now. It's a new system which came recently, 2015-16 time. So that time UPSC had asked question also, detailed question. So payment bank, they, instead of giving out loans and making money, they invest in government securities and all. So that and all you will learn as and when you solve more and more questions. So here answer is 1, 2 only. Payment bank is a new model of banks conceptualized by the RBI. These banks can accept a restricted deposit, which is currently limited to rupees 1 lakh per customer, meaning you can deposit that much only, not like your savings account in other normal HDFC bank or SBI bank, that how much ever money you want, you cannot put like that in payment bank. Okay, so these banks cannot issue loans and credit card. There's no credit system, there is no loan system. Okay, they are not allowed to accept time deposit or fixed deposit. Okay, so I told term deposit that time, it's actually time. Okay, time deposit or fixed deposit, and cannot sanction loan also. They may accept only demand deposit. Okay, demand deposit is this only, current account and savings account, meaning you are anytime you go and demand to the bank, they'll give your money. That is demand deposit. Okay, so payment banks can issue services like ATM cards, debit cards, net banking, mobile banking, everything. And Airtel is the first one to set up a live payment bank. So this is the basics, and this much is enough for a prelims question solving. Okay, so again, history I have given for mains answers and all. In 2013, this Nachiket More committee was there, and he is the one who suggested this. Okay, so how we will remember this? Like more. Okay, so more type of payments he brought in. Okay, there is a payment bank, there is small finance bank, there are not more questions you will see. So that Nachiket More is the one who gave you more type of payments. That's how I remember. So the committee name you can remember like that. Okay. So he submitted a report in 2014, and obviously this government, you know, whenever they hear some new initiative, especially if it's a modern digital type thing, they will implement it, and that is what they did also. So RBI came up with the final guidelines in 2014. Then 2015 again some advisory committee was there. Licensing was issued, like you can apply for license. So that time many like Idea, Airtel, Reliance, everybody applied for that. They want to start a payment bank. So whoever quoted the highest, they would have got the licenses, or they will check the background also, like whether you are capable of doing that. You have the different features, that and all is different things you will study. So like that, Indian Post and everybody started becoming a payment bank. Okay, so here if you see, again, okay, this is a history, like in principle license was valid for 18 months, like that it granted full license later under different acts. So like that it was fulfilled, and these are the features. Okay, like how can you, like suppose you want to become a payment bank, how will you have? You should have a minimum capital requirement of rupees 100 crore. For the first 5 years, the stake of the promoter should remain at least 40%. Okay, meaning whoever is promoting it, not like you take money from hundreds of investors, you should have that at least 40% stake in the company. Foreign shareholding will be allowed in these banks as per the rules for FDI in private bank. Okay, so like FDI private bank, some rules will be there. That same applies to here also in this payment bank concept. Voting right will be regulated by the Banking Regulation Act 1949. The voting right of any shareholder is capped at 10%, which can be raised to 26% by RBI, and any acquisition of more than 5% will require approval of the RBI. So these are all very stringent terms and all, and I don't think for prelims UPSC they'll ask all this. Okay, but at least you should know it is regulated by the Banking Regulation Act, and then this 100 crore minimum requirement is there. Okay, and then majority of the bank's board of directors should consist of independent directors according to again RBI guidelines, and bank should be fully networked from the beginning. Okay, the bank can accept utility bills. It cannot form subsidiaries or take any non-banking activities. Deposits can be capped at 1 lakh per customer, but it may be raised again by RBI, okay, based on performance. If you perform well, they will give you more allowance. The bank cannot undertake lending activity, no loan, no credit card, nothing. 25% of its branches must be in unbanked rural area. Okay, this is one point you have to know. The bank must use the term payment bank in its name to differentiate. Okay, so you should not simply tell Airtel Bank. Okay, bank is a different thing. You should tell Airtel Payments Bank. The bank will be licensed as payment banks under section 23 of the, again, Banking Regulation Act, and it will be registered as a public company. So it is governed or licensed under this Banking Act, and it is registered as a corporate company also under 2013 Act. Okay, again, more questions I'll show you, but this is the basics. Now again, small finance bank. This also came that time only. Which of the following is false with respect to small finance bank? It should have 25% of its branches in rural area. This is actually true. They can be promoted either by individuals, corporate or trust or society. That's also true. CRR and SLR will apply to small bank. CRR, I told you that cash reserve like 4% or 5%, RBI will tell that much money you have to keep in keep with the RBI. The bank has to keep with the RBI. That applies to small finance bank also. Okay, and SLR is statutory liquidity ratio. Again, RBI will tell around 22%, or it will keep changing. Okay, that much percentage you have to keep the money with you. And you cannot give it out as loan. Okay, that will be like in the form of cash, in the form of gold, in the form of government security. You can keep that. Okay, so that is SLR. So that things which apply to normal banks, right, that will apply to this as well. Now it should give 50% of its loans to agriculture sector. That is wrong. Why it is wrong? In the explanation we'll see. Okay. So small finance bank are type of niche banks in India. Banks with a small finance bank license can provide basic banking services of acceptance of deposits and lending. Okay, this is the difference between payment bank and small finance bank. Is here lending is also allowed. It is just a small type of our normal bank. Okay. The aim behind this is to provide financial inclusion to the sections of the economy not being served by other banks. Meaning there will be areas where maybe the big banks don't have branches. It will be unbanked areas. So that places small type banks. Okay, even you private players, anybody can go and make such a bank. See, individuals, corporate, anyone can set up a bank. Okay, where if you can provide them financial inclusion, then you will be welcome. Okay. So it's for small business units, small and marginal farmers, micro and small industries, unorganized sector entities. Everyone can make use of it. Okay, because in India, finance everybody needs. So if every bank can't reach there, set up a new bank for them. So again, the conditions, same like payment bank you saw, conditions are given. Okay. So registered as a public company under Company Act. If you see payment bank also, it was like this. Then licensed under, same thing. Okay, so such things are same and governed by provisions of all these act. Okay, these are all our bank act. So this you should know. Okay, so this deposit and insurance guarantees, like if people are putting money in your bank up to 5 lakh or something, that money will be insured. Okay, meaning even if bank catches fire or something happened, up to 5 lakh you will get insurance. This is the act which governs that. Okay. Then small finance bank will be given scheduled bank status once they commence their operations and found suitable under this RBI Act. Okay, meaning scheduled bank means our normal bank. So if you work under particular conditions and they find it like, okay, you are suitable to be upgraded to a scheduled bank, that also you will get under this RBI Act clauses. Okay, then existing NBFCs, microfinance institution and local area bank can apply to become small finance bank. Okay, so this also UPSC can ask, like who all can become a small finance bank? Existing NBFCs or microfinance institution, local area bank, everything. Okay, local area bank, UPSC question came in 2018 or 19. So try to find out about it. Okay, they can be promoted either by all these people. They have to keep CRR and SLR, then established as public limited companies in the private sector under the Companies Act 1956. Okay, the bank will not be restricted to any region, but it needs to open at least 25% in the unbanked rural area. Okay, they are set up with a twin objective, that is promoting rural and semi-urban savings and for providing credit for economic viable activity in local areas. 75% of its net credit should be in priority sector lending and 50% of its loan in portfolio must in 25 lakh range. So whatever loans they give, right? Because like payment bank you saw, they can't give loan, but small finance bank can give loan. So, but there is a condition. 50% of their loans should be in the range of 25 lakh. Meaning you should not give to one person itself 1 crore loan, 2 crore loan and all. You should give 50% of the loans in this range only. Meaning small people who need small loans for small businesses, that is what the priority, at least 50%. Remaining 50% you can do whatever, okay, with the money you have. And then 75% is for priority sector lending. And priority sector lending means there are many things. There will be like a bank has a list in RBI, Google, if you go and search, you will get a list of priority sector. Meaning agriculture is also one of the sector. Like that different sectors are there, which is priority, which banks will tell, RBI will tell you have to give more loans to them. So they're telling 75% to this. But in my question, in my statement, what we told, 50% to agriculture. It's nothing like 50% to agriculture. 75% overall should go to the priority sectors. Okay, within that, there are a lot of sectors. So that is the thing. Okay, so this only you have to by heart, UPSC can ask. And then capital at least 100 crore, which is same as payment bank. So it's most of the things are similar to payment bank. Then promoter should have 10 years experience in bank and financing. Okay, it's not like the other one. Here this extra clause is there. Then promoter stake in the paid up equity capital will have at least 40% initially. Again, stake. Okay, there I think it was 10% or something stake. Here 40% stake, like that. Basic stake related things are also given. Okay. A net worth of rupees 500 crore listing will be mandatory within 3 years. Okay, so meaning 100 crore you start, and by within 3 years 500 crore net worth you should have. That is all the conditions to continue as a small finance bank. Now again more questions so that you will understand more things. Here all the statements are true. Resident individuals or professionals carrying 10 years of experience in banking will be eligible to start SFB. This only we told here. Okay, 10 years experience. SFBs can convert to a full-fledged bank. That's also I told you. If you perform well, you can convert. SFBs are mainly for the growth of agriculture and MSMEs. That's also true. Okay, because these are all coming under that priority sectors. Then Suryodaya and Utkarsh are examples of small finance bank. This is also true. Like you heard Airtel and Indian Post being examples of payment bank. These are examples of small finance bank. So this is how I have framed the questions in order so that once you study it, then anything UPSC asks from these topics, you should be able to answer. Okay, again, more details are there. We see payment banks cannot do what? They cannot accept NRI deposit, true. They cannot handle cross-border remittance, true. They cannot offer credit card, that also true. Okay, so again, more points you learned. Now again, a comparison question. Both payment bank and SFBs need 100 crore minimum capital to be set up. That is true. Both payment and SFBs can sell mutual funds, insurance and pensions. This is actually true. Payment bank also can do that. Both payment bank and SFBs must set up 25% of their operations unbanked area. This is also true. By this time, I have explained all these three already in the previous questions. Now, both payment bank and SFBs must extend 75% loan to priority sector. This is false because payment bank cannot give loan. So, you eliminate 4, you get the answer 1, 2, 3. Okay. So, SFB must give 75% priority sector, but payment bank cannot give loan. Payment bank should maintain 75% of their deposit in government bond, okay, and 25% other bank. That's how they make money. They don't have this loan concept. So how will they make money? They will invest in government securities, and from there they will earn money. Okay. So now here again a comparison. This is an old Hindu newspaper article. So payment bank and small bank. Okay, who can issue? Here given. What they must do, that whatever I told, same deposit, the 100 crore, all the stories written here. What they can do, offer internet banking, this thing and all. But loans wouldn't be here in payment bank. But here, loans also will be there. And they can convert it to full-fledged bank also. Then here, offer credit card is there, offer extend loan is there. And then what they can't do, okay, they can't offer credit card. They can't extend loan. They can't handle cross-border thing. They can't accept NRI deposit. Here, they can extend large loan. They can have subsidiaries. They cannot deal in sophisticated financial products. Okay, so this is the detailed thing. And this much is enough. How much of questions we have discussed, right? This is more than enough for you to learn the complete thing about payment bank and small finance bank. And this is, I think, the maximum for prelims at least. This is the maximum which they can ask. Okay.